So the big headline today has been India's GDP print that has come in at 7.2% during FY23. This is being celebrated because it is above the estimate of 7% projected by the RBI. In fact, a variety of estimates were beaten by this 7.2% figure. The data also reveals that GDP growth gained momentum in the Jan to March quarter. So that's really the whole hero of the piece, which has contributed to the 7.2% figure. So what happened Jan to March? An impressive expansion of 6.1%. This also marks a significant improvement on the previous quarter's rate of 4.4%. Although one must say the year-on-year GDP slowed down from 9.1% to 7.2%. Now, the pleasant coincidence has also not been missed with the Modi government celebrating 9 years in power. The better than expected GDP numbers are expected to create some cheer for the ruling party. But let's stick to the economics of it this evening and talk about what this really means for India going ahead in what is consistently a tough year. Germany, for example, has gone into a recession. China is expected to grow at about 3%, and India at 7.2%. How does that put things in perspective? To speak more on this, I'm joined now by Arvind Panagariya, Professor of Economics at Columbia University. He's speaking to me from New York City, and of course, he's the first Vice Chair of the Niti Aayog. Thank you so much, sir, for speaking with us this evening on an exciting day as far as data is concerned. I must tell you that GDP as a conversation is usually relegated to us in business channels, but today it's headline news everywhere. So that 7.2% figure has become big news everywhere. Let's begin by talking about this number. Was it a pleasant surprise, and what happened between Jan to March to change that picture?
Well, it is and it is not to me, Tamanna. You know, back in November, I was saying that we'll easily cross 8%. We didn't cross 8% principally because the older numbers, you know, the numbers for 21-22 got revised upward. So the base went up. But if I were to actually calculate the growth rate now on the old base as it stood in November of last year, then we have actually crossed 8%. So I'm sort of pleasantly surprised, or I shouldn't say not so much surprised, but it's a very pleasant thing that has happened for me, that the numbers look as good as they do. So that is kind of my overall reaction to the numbers. They are, as I was hoping then they would be, back in November 2022, and I'm really glad that that's where we have ended up landing. We can talk about the details. There are some areas of concern, but we can talk about that as we go.
In terms of how we're looking at this number, 7.2 is definitely better than what was expected. But if you look at it versus FY22, that was 9.1%. We've come to 7.2%. Now explain that to us, because is the 9.1% actually 9.1%, or is something that we love to call base effect at play here? So put that into context for us.
Yeah, so no doubt the last year's number of 9% plus had a lot of element of the base effect, because remember that, you know, the prior year, 2021, had seen a decline in GDP of 6.6%. That was the major COVID year, particularly the quarter of April, May, June, when we had seen a very, very sharp decline in the GDP. And that had resulted in overall, for the year 2021, a decline of 6.6%. So evidently, you know, the base was lower. And so when we came back to 21-22, when, you know, except for the Delta wave, pretty much the economic activity was happening on a more kind of normal basis, not completely normal, but certainly much more normal than was the case in 2021. So that naturally gave a boost to 9.1%. So we were basically, you know, pushing ourselves back to the trend where we would have been had there been no COVID shock. But now, you know, that happened 9.1%. And so base effect had been used up more or less in 21-22. So 22-23 is a very good news because we are back to 7% plus growth rate, which is what I think our potential, minimally, I think our potential could be is a bit more if we do a few more things. But certainly, we are back to our potential. And back to, the first 5 years of Modi government, if you look at first 5 years, growth rate was actually 7% plus. That is what we did. The whole picture gets a bit roughed up by 1 year, 1920, when the growth rate had fallen to something like, a little below 4%, 3.7, I think. But otherwise, if you take out that 6th year, which is 1920, the growth rate was 7% plus, I think 7.4%, if I remember correctly, during the first 5 years. And that is our true potential. And then, of course, COVID happened and all, but we are now returning to where we were in the first 5 years of the Modi government. And we ought to sustain that in the next decade or two. Minimally, we should perhaps be able to accelerate it with a few more reforms, which may happen, in the second term, probably won't happen in the first one, in the current one.
So glass is half full with 7.2%, even if you compare it with 9.1% the year before. Let's go into the details because the devil is in the details. And I like your view on this because what struck me is agriculture has continued to shine. I'm talking about Q4 as well as, full year. But manufacturing is a bit shaky. We need to work on that. The Indian consumer spend is what has also pulled us through.
I think you put your finger on it. Manufacturing is what worries me. On agriculture, just a quick comment that that has been actually an absolute pleasure, to see, because so many of such a large proportion of Indian population depends on agriculture. For a straight third year, it has performed incredibly well. It's not only the 2 years for which we see the data here, but also the year before that, so it was 5% plus in the year 2021, and then 3.5% and again 4%. So agriculture is a hero here. Only that the share of agriculture in the GDP is small, and therefore it doesn't have a huge impact on the overall growth rate, only on the margins. But manufacturing really remains a worry to me. There is something, I don't know whether we are not seeing it or we are not doing, but without, that is my thinking that, without manufacturing really kicking at something of the rate of 10% plus, we really can't achieve the transformation that is required, which is, creating a lot of good jobs for the people who are currently in very underemployment kind of jobs in agriculture, particularly very, very low productivity per worker. And that to me still remains a worry. I think that is where we need to do a lot more. Services, of course, have been doing quite well, doing their part of the job in a good way for a long time on a stable, sustained basis. Construction, I think, has been very good news. Last year, 4.8%. Then once again, this year, 10%. That's very good performance. Again, construction I particularly mentioned because it creates good jobs for the people. And from that point of view, it is important. Also, good is the trade, hotels, transport, communication sector, which was 3.8%, now 14% in the current year. Again, solid performance and needed to recover because this was the most impacted sector by COVID. And so I was hoping that this sector will do well. So that also has pulled off well. So that, I think, roughly is the overall picture, that we need to do a lot more work on manufacturing, sustain agriculture, sustain construction and services in general.
Talking about manufacturing, I must bring up sort of controversial report statement which came up a few days ago regarding the PLI scheme from Mr. Raghuram Rajan, specifically in electronics and mobiles, etc., where he broadly made the point, and I'm broadly paraphrasing here, that more than manufacturing mobile phones in India, we're merely assembling them. Do you see any merit in that as we set to expand the PLI schemes to various other sectors?
Yeah, no, I personally don't really see much merit in that. Tamanna, for the reason that I've always maintained the view that it's not value added per unit of a product. It is also how many of those units you are actually producing. You can produce an entire kind of aircraft at home. But if you're going to do it at an incredibly high cost so that you have no buyers of that aircraft, what good it is to produce the entire aircraft at home. In today's modern world, there is specialization by stages of production. You don't specialize in the entire product as we used to in the past, because the transportation costs are not so low, communication costs are so low, that specialization takes place by stages of production and by components. So the trick is to focus on the total value added, not on value added per unit. So I think that is the key to me. Now, there may be a point to, I don't know how exactly Raghuram Rajan made that point. If the point is that, look, whatever value added we are doing at home is substantially covered by the subsidy under PLI that we are giving, then I think that is a matter of great concern. I personally don't think that is the case, but that's something of an empirical issue which somebody ought to check. That if that is the argument, but I don't think that's the argument Raghuram Rajan was making. He was just complaining about low value added domestically. But in general, there is no reason why you have to have high value added in a product. As long as the particular a component of product that you are producing at home or particular assembly that you are doing at home, you are doing cheaper than anybody else. Then you capture the entire global market in that particular activity. And you do it across different products, So that is how I see it. Wherever you have comparative advantage, in whichever activity or component you have the lowest cost of production, capture the entire global marketplace. There ought to be your objective, not increasing necessarily value added within the same product. Because if you try to do that through this kind of protectionism or subsidies, etc., in the end, your cost of production will become simply too high and you'll not remain competitive in the global marketplace.
Coming back to the key question, when we're talking about manufacturing and the context of manufacturing, is the PLI scheme the code that we finally cracked? Because the initial reports seem good. There seems to be an interest in that scheme. And then how do we get Indian industry to increase their capital expenditure and manufacture more?
Yeah. So I would say that if the choice is being made between expanding a sector through protection versus PLI, the subsidy, then subsidy is definitely a much preferred instrument, because you target that subsidy to the firms that are going to be relatively large and therefore will capture the economies of scale, whereas protection goes in and encourages everybody, including the very small ones, and that's a more inefficient way of promotion. That being said, I personally don't think you can through PLI capture all the sectors. It's not feasible. You cannot do it. Subsidy has to be financed from somewhere. And if you subsidize every single sector, who are you going to tax to raise your revenue in the first place? So sectorally, yes, you can produce successes through subsidies. But you have to look at the manufacturing sector as a whole. We have to step back, Tamanna, and ask the question, has PLI been successful in promoting manufacturing production overall? Answer there is clearly in the negative. There is no doubt you can make a success of specific sectors through these subsidies, because if you give them enough, then you will get the activity happening in that sector. But then resources are going to come from the other sectors. Ultimately, when mobile expands, it is going to draw capital out of the other sectors. Our naked eye doesn't see that. But of course, when you sit down and look at the data, what is happening, ultimately it shows up that what happened, ultimately the question we have to ask is what happened during the PLI regime to the overall production of manufacturing. Did it actually get stimulated? And there, I think, the jury is certainly out. If anything, the evidence is that so far manufacturing has not done its part of the contribution to the economy. And investment, yes, I think, but on investment, though, I see pretty good news in the numbers. In real terms, investment is now up to about 34%. Before COVID, it was hovering around 28, 29%, and it began to rise then, to about 31%, then went to 32. Now it's at 34%. That's a very, very good news. And our consumption, private consumption spending also is holding up. So those are all good pieces of news. The main thing is manufacturing, and there we ought to ask ourselves that is there something in the policy regime which is keeping the manufacturers at bay? In the end, and look, one of the things we have not done is to implement the labor laws. 2019 is when we passed all the 4 labor codes, and they still remain to be implemented. I think, the government needs to find a way. Look, if 1 or 2 states say that we are not, if they are dragging their feet on writing rules and regulations, that should not hold back every single state, which is what is happening currently, So the government has to find a way to resolve that problem and implement the labor laws.
Since you've come to the policy question, and that's the perfect segue, because let's look at the backdrop of what's happening right now. You've had the GDP numbers out today. You've had a very positive Morgan Stanley report talking about, 10 broad decisions, which has led to India's decade and the big decade of change. And it all coincides with 9 years of the Modi government. Modinomics is being discussed, being talked about. Do you think, if you had to take a bird's eye view over the last 9 years, 10 years, and the Modi government's tenure, which is 9 years, and the policy decisions made, have they ticked all the boxes? GST was definitely on that list, done. IBC, though one could argue that is it really doing what it should be because of judicial tangles? Digitization, formalization, RERA, a lot of that has been done. Would you say labor code is on top of the list of things unfinished? And what else would you add to that list?
Yeah. So on the list, you already mentioned it, but I want to underline that fact that I must say that what the Modi government has done on infrastructure, in which I also include the digital infrastructure, is absolutely breathtaking. I think, my hat off to the government on that one completely, and never in the past we have seen the pace at which the government has built up the infrastructure. And again, digital infrastructure also is quite an amazing set of platforms. It's not just one platform, but set of platforms that we have created. Some are still being created, but also the physical infrastructure, absolutely marvelous. And this is why I feel very optimistic that this ought to bear fruit in the years to come. Now, to checking, what boxes have not been checked, certainly labor codes need to be done. But then there is a big area which unfortunately is not in the central government's domain, and where this, that is the land. Land remains incredibly expensive in India. So in spite of that, of course, the government is able to build all the roads and railway lines, etc., at breakneck speed, which is a marvel in itself. But for the private industry, land is very expensive, very scarce. Only states can solve that problem. I wish, that the government works with at least, to encourage some of the states, It's a matter of encouraging a few 3-4 states to really do the reforms related to land. That will be a big help. Labor codes clearly have to be implemented. I feel our higher education system also needs to be reformed. We are working with the old 1956 UGC Act A lot of problems there, including also, foreign universities are still not quite welcome. Legal framework simply doesn't exist for their entry, but also privatization. I mean, the Modi government has taken the first tough steps there. Things like Air India being privatized, and some of these steel, one of the major steel firms was also privatized, and all. This is very good. Good progress. It, of course, partly also got some judicial hurdles there and all. But there, I think a lot more progress will have to happen in the years to come, both with respect to the enterprises, public sector enterprises, but also the public sector banks. We need some progress there. I understand that now, because only 1 year remains, so the government is hesitant to proceed on that front. But my sort of very clear assessment is that the Modi government is going to return in 2024. And then I think, in the very first year, it has to go bang, bang, bang on many of these things.
Is that bang, bang, bang going to happen? You're assuming if they come back in 2024, then year one will be again 2024? And do you think they will go slow in the last year, pre-election year focus changes?
Well, that's a normal cycle, if they don't, I'll be very happy. If they don't, personally, I have stake in reforms. But, the pattern really one sees is that in the last year, governments go down more on social schemes than on actually reforms that may turn out to be contentious. And in the current environment also has become so vitiated, that any little thing you do, any little misstep, it gets magnified both by the opposition and the media in India. So I think that has made the task of the government a bit tougher. But that's the world we live in, comes with democracy. But my anticipation or certainly hope is that in the first year, then we will see bang, 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 a lot of things that are currently not done should get done. Some of the other, on the political front, the government had managed what it wanted to do quite a bit in this term, things like 370, etc., triple talaq, etc. So I'm hoping that economic agenda will acquire the front seat again in 2024, and that I think ought to be the roadmap for this next
whatever happens in the next election, the India growth story has to continue. Everyone's stake is in that. There is no question about it. And today, yes, GDP has become the big headline and being politically cheered as well. I don't know if it wins elections. I don't know if economy wins elections or turns elections. We don't know.
Absolutely. Absolutely it does. People are not stupid. People
So no, this is interesting. Quick word from you. So you think 7.2% is a good political pitch as well?
Oh, of course it is. Of course it is. I mean, I've written papers on this, Tamanna. And you can look at the state level. You see chief ministers that deliver, including growth. Growth is not the only factor. Because, I mean, UP, if you look at, for example, growth was still a bit tepid, but Yogi did win the election. And so, to me, a couple of other factors are law and order is extremely important. If, you go from very poor law and order to effective law and order, I think that will get you back. Corruption, if people really see you as a corrupt government, then they throw you out as well. So those two or three factors, I mean, so governance and growth, those two factors really more or less explain to me much of what has been going on in terms of election outcomes in the last 25 years.
The viewer is definitely wiser. The viewer is, of course, always wise, and which is why it's always a pleasure to speak with you, Arvind Panagariya. Thank you so much for speaking with us this evening.
Thank you, Tamanna. Thank you.